What's going on, traders, and welcome to this week's episode of the Weekly Watchlist. Before we get going, I'd like to make your attention to the newsletter that's begun. Every Sunday, I send out a newsletter that contains 5 to 10 stock picks that I think have the potential to move this week. Whether or not that's a swing trade for you or a day trade, that's completely up to you. How you want to play it is up to you. I think you will just find value in being alerted to these stocks. If this is something you're interested in signing up for, head on into the description of this video, click the link below, and scroll to the bottom of the page, enter your email address, name, and I promise you on Sunday afternoon, that newsletter will wind up in your inbox. Without further ado, let's get started with the video. We have the weekly watch list where I give you a technical analysis and some of my thoughts on the stocks here on the left. We have the broad market and some blue chip companies. And as always, we're going to be starting off with the SPY weekly chart. So checking out the SPY weekly chart here, you can see we have a nice red bar. It's not a bearish engulfing bar, as in it didn't violate the lows of the previous week. However, it is a almost solid red candle with a very, very, very tiny tail there on the bottom. But it is respecting our support zone down here at 296.30 quite nicely. So in this regard, I would think this is quite a bullish signal, respecting the support. Nice move up. A little pullback here, and everything's okay, good to go. Next step is another new high. However, based on the candle, maybe that doesn't happen. Maybe we see a little bit more consolidation around this 296 level. Even a pullback down here into the 290.30 level would be a-okay. Ultimately, we do want to see the higher lows continue, so we want to maintain this trend line here and not really violate this low down here. We can draw that one in just so we have a reference point in terms of price, and that's right around 272.83. That low is the key low to not violate on the way down if we do see any deeper pullback from this trend line here. Anyways, zooming into the daily. Zooming into the daily, you can see why I think this 290 level is a little bit more important than our next one further below at 281. And obviously that's because we have our 50 SMA on the daily coming into support. So if we see any sort of panic sell into this area, I think it would be a buy right off the bat just because of the 50 SMA and our support here coming together to form what we call a super support. We have two reference points lining up. So that's what I think on the downside. On the upside, I think we sort of just go sideways. It would take a lot of buying volume, something like this size, these size volume bars, to really push up through our upper resistance trend line. I think it's so strong and intact from all the touches throughout the past year or two. I don't really think that we see the summer volume push it through and see any follow through there. I think we sort of hover around this area, if anything, and go sideways and potentially, again, look for a deeper pullback into this level on SPY. The Q is very similar. Again, big gap up and no follow through, just essentially all selling there on Friday. However, you can see our volume bar isn't quite as big as it was on SPY relative to the previous day. So this tells me tech might be a little bit stronger. We might see a bounce here before SPY does, right off of our level here at 291.26. Again, it violated the level by a little bit. However, I think it's strong support here. You can see all the touches we've had in the past. Little back test here is nothing to really be worried about. I think maybe we see some consolidation similarly to SPY, and then another move in the upwards direction. Maybe retest the all-time high here at 194. We do want to see this level here sort of maintain as support right around 188. If we see 182 come, that could signal to me a bit of a head and shoulders pattern forming if we zoom out a bit. So if you could imagine, we have shoulder 1, head, and then if we see 182, that would potentially set up a shoulder 2 somewhere in this zone, which again, though it's a bearish pattern, couldn't quite push back up to those highs, and we would see downwards movement from there. IWM has completely just been boring, nothing really exciting here. I thought we were going to see a breakout this week after this really tight consolidation zone, but as you can see, we only sort of solidified that even more, a little bit, violating it a little to the downside there. So maybe that's a foreshadowing to what's going to happen. Maybe we see the doubling of our balance box to the downside and we see a move down here to 151. That could potentially foreshadow for the rest of the market. Maybe the market sees a deeper pullback as the small caps move in the downwards direction. I think 151 would act as solid support just because of everything we have coinciding here. Again, super support. If we go down through the 50, 200's coinciding with the 151 horizontal price level that we have from here. I think that's definitely a buy, at least for an intraday scalp on the upward direction. Alrighty, getting into our companies now, starting off with Apple. You can see, just keep in mind, we do have earnings coming up. I think that's not this upcoming week, but the week after. So something to bear in mind. Premium prices will be a little inflated. You can see we're at the bottom of our channel the trend line here on a nice big red candle. I wouldn't be surprised if we see some poke through and retest this $200 whole level here. You can see it was resistance. It should act as support on the back test. I wouldn't put too much hope into keeping this channel. Again, with earnings coming up, anything could sort of happen. We could go sideways right up until earnings and then a big gap on morning of earnings. As you can see, something similar to what happened here. Big gap up here. And then big gap down. I think this was dividend payout. But Apple, I would watch for a breakdown to 200. Look for a possible intraday bounce there. If we keep going, look for our next support down here at 195. Anything on the upside, the upper end of our channel. Also, we have resistance here at 208 and then around 215.20 from the highs here. Alrighty, Netflix got absolutely crushed on earnings. If you were watching, it was... I don't know if it was quite double the expected move, but quite a bit more than the expected move on Netflix. I was talking about how it's just been consolidating and going sideways here, so nice to see it sort of break out and go one way or the other. The next thing I would watch for here on Netflix is obviously we have a nice red candle, so we're looking for support below. It's not going to come in for quite a while. Our next support below could be considered somewhere down here. I would call it in here, right around 296, 295, even $300 whole number would offer some support before we got there. You can see there's a tiny gap to still fill on the chart down here, so maybe that'll happen, who knows. But anyways, that's a level of support to keep in mind down there, around 300, 296. If we get any sort of bounce, which based on this candle and the volume doesn't really look like it would happen, we're looking at the 200 SMA starting to coincide with our 340-ish level. That would be resistance certainly on the way up, and I would even call this resistance here, just based on the action of that day. Obviously, prices shied away from the 330 level there, and we've continued in lower direction, so keep those in mind on Netflix. Tesla is continuing to surprise and just sort of go in the upwards direction. I thought we were going to fall out of this rising wedge, but that's not the case. So we broke out of this. We'll get rid of it. You can see we also have earnings here on the 24th, so that is this week. Keep that in mind. Anything can happen on Tesla. I'm not a fan of the fundamentals of the company, but this is a technical channel, so we'll keep it technical. The 200 SMA above us should offer some resistance if we see a pop on earnings there and a move in the upwards direction. If we break above it, look for a back test of that 200 SMA. If we gap down, I would look for this level here at 231.40. That has offered some support in the past. It was resistance in here, sort of support down around this level. But, you know, anything can happen. I'm not sure what the expected move is. However, I wouldn't be surprised if it gaps majorly in one direction or the other. Could come below our 50 SMA, in which case we're looking at 207. And then if it decides to bounce intraday, the 50 SMA on the daily could certainly be a reference point to keep in mind. And I wouldn't really expect it to come all the way back down here to the lows at 176, 177. But if it does, just know there is a level of support down there. On the upside, again, the 200 SMA. However, let's see, if we scrunch up the chart a bit, we can draw in our next sort of level of resistance. I would call it somewhere in there, and then I would also call one somewhere in here. So keep those two levels, 275 and 296, in mind as well on the upside. BABA just kind of floating around here. We talked about the gap that filled here, and after prices didn't really, accept the gap, and then we gap down, refilled the gap to the upside, which is cool. No open gaps as of now, sitting right at this support point. If we break it, I wouldn't be surprised to see us come down and retest some of these lows in here. However, if we see the market and everything sort of just go sideways through this earnings season, I wouldn't be surprised to see it bobble around in this channel, getting rejected around 180, 178. This sort of resistance level in here, you can see there's some data points back here where there's resistance closer to 180. So look for that on the upside. On the downside, 172 or 168.50 just about. Facebook has earnings this upcoming week, so again, watch this one carefully. I wouldn't really go long or short with calls or puts on any earnings play, just because of how inflated the premiums are right now. You need a monster move to make up the difference there as time goes on. But right now, again, sitting right here at a support zone. Big red candle though, so anything could kind of happen. The volume isn't too impressive, if you will, so the selling isn't too strong. It's just as strong as this day of buying. So anything could really happen here. We could see the prices go sideways along our support until earnings, and then a big gap up one way or another. I wouldn't be surprised if there's a little quiet before the storm, and then boom, something big happens there on earnings day. So keep that in mind on Facebook. Reference points below, we have the 50 SMA coinciding with some support here where you can see prices sort of stopped and then made the move up. We'll draw that one in. That's right around 187. If we dip below that, coinciding nicely right there, actually. If we dip below that, we're looking at 174. Anything lower than that, I'd hope the 200 SMA comes into play before we get all the way down here to 160. Again, that's if we get a massive gap down on earnings. If we get the gap up on earnings, we're looking at 218.14 to come into play, which I believe would be the full gap fill. Yep. All the way from back here, if we gapped up into this level based on earnings, that would be the full gap fill from our previous earnings, where we saw this massive move to the downside, and we've since recovered. So things to keep in mind on Facebook. NVIDIA is looking like it's getting rejected here at the trend line. I'm not surprised that we had a doji and then a red candle, 200 SMA. Also that, again, descending resistance trend line is coming into play. I wouldn't be surprised to see a further pullback here on NVIDIA, something coming back down to 264. It just sort of looks like we don't want to break out of this resistance trend line quite yet. You can see the indecision, then the red volume, again, not too impressive, so that's why I'm sort of inclined to believe it'll go sideways, dip back below the resistance trend line, possibly come back down here to 155, and sort of just float around this area before the market earnings season comes up. Again, earnings are just around the corner, 8:15 on NVIDIA, so safe to play it for now. The weeklies will be good, but as we get close to that, premium will be inflated. So keep that in mind. On the upside, we have 174. If we get a break, and we do see a move to the upside here, 174. After that, 184 and 193. ROKU making a nice bull flag here. You can see we've made a nice move up. Consolidating, I wouldn't be surprised to see a little bit further of a pullback, maybe into this level here at 105, just about, not quite the 102 level, but the tops of these wicks here. Pull back into that level and then another move up. ROKU's just been an absolute monster ever since we got this big green day here. Everyone's been loving it, hopping on the buy train, so I wouldn't be surprised, again, if we see some consolidation, move in the upwards direction. Earnings are coming up. Let's draw in some resistance up here at 113 now that we have that. And yeah, again, I'd just look for it to play nicely in between 113 and 102 just to play it safe on the downside for now, but the trend is strong in the upwards direction. A little consolidation and then potentially another move in the upwards direction. So Microsoft already had its earnings, and you can see we had a gap up, but the gap was filled all the way back down to where we were. Didn't really accept the gap up. Let's see on Monday whether or not we see a move in the upwards direction and confirm that the gap has been closed and we're ready to continue in the upwards direction. In that case, we'll have a reference point here at 140.67 just about as resistance. This level here at 138 or 139 just about based on this high and this high here should act as resistance on the way back up. Again, depending on the way we open on Monday, will determine whether or not we open above or below the support trend line. You can see we dip below it here, so I wouldn't be surprised if we see a little dip below and then a recovery there. However, again, look at the massive red volume here. Lots of selling that day. It could potentially continue into Monday and the upcoming week. We do have support down here at 134 based on the low of this little tail here, so I wouldn't be surprised to see it sort of come down here, consolidate, and then another move in the upwards direction. Again, the trend on this one is really clear and strong. AMD, nice little pullback. Again, we do have earnings coming up. It's earnings season. You've heard me say it over and over again. Little pullback. If we can get down into this sort of support zone based on here, then I wouldn't be surprised if we see a little bounce or even this support trend line. Nice little bounce off of that. 50 SMA starting to coincide. So this is a buyable pullback. I would expect a nice little bounce to retest our highs there at $34, $35 just about. I'd say it wants the whole dollar there at 35. You can see people rejected it, right off the bat here. But on the retest of it, I wouldn't be surprised if we saw the 35 whole dollar. Volume has sort of fallen off, which is a good thing when it's consolidating, moving in the downwards direction. You want to see the buying pick up, sort of like we saw here. Buying volume picks up. That would be a good signal to get back in, and the 35 retest is on the way. McDonald's, I don't really know what to make of this one. It's just sort of riding this trend line on either side of it. So I would say for now, we do have earnings coming up. Anything could sort of happen. Again, the gaps, keep those in mind. But right now, big red candle, pretty big red volume relative to some of this buying volume in the past. I wouldn't be, well, if we check out this red day too, lots of force there, lots of volume, but we did make a nice move after it. So maybe we're just consolidating a little bit. We are sort of going sideways. I wouldn't be surprised to see it go sideways a little more because of this red volume. So sideways and then maybe another move up, sort of like this. But again, keep in mind earnings that will sway which direction the move is when it comes. So Amazon had a interesting end of the week. We had this nice red hammer here, which was beautiful. Happened right off a support zone. You would have expected the prices to recover and sort of see the buyers step back in, but that didn't happen. Instead, Friday we saw more blood. So the way things are, getting this wick being rejected on Friday, I would expect more red This will be our main reference point on Monday, whether or not we get below 1951.35, the low of this candle here. If we break down below that, I'd say our next support is in store, which is 1919, so keep that in mind on the downside. If this does come to fruition and the hammer produces a bounce here after another day of consolidation, maybe we bounce off the lows here on Monday, we see a little dip, and then the bounce starts. We're looking for a reference point up top of 2038 based on some of these highs that could be very well in play, and then anything after that is our 2050 level following the break of this high here. So that's Amazon. All right, guys, that's going to wrap up this week's episode of the Weekly Watchlist. If you enjoyed or learned anything, let me know down below in the comment section, and feel free to give the video a thumbs up. Again, if you're interested in joining the newsletter, go to the link in the description, enter your email, and I promise you'll have the newsletter on Sunday night, which is tonight. And with that, I wish you a green trading week.